Hey guys, we're going to go through the Saas financial model now and give you a high overview of each and every sheet so you can see how this works and if it's the right model for you. So let's just kick off. Now, every one of my models has a quick introduction with some guides, an overview of each of the sheets, how formatting works, but you can of course have a read of that yourself. Then we get into the formatting sheet. Now you'll see here that we have a date for when your actual start and when your forecast start. And I'll explain why that's relevant in just 1 second. And then you can set your year end. So for purposes of tax, for bonuses, you can, pick the month that you're actually going to have cash out. Okay. Now for the formatting, the model is done in US dollars because frankly, that's the currency of investing. So these formats will change the headers of each page. Now, if you have income tax, just pop in whatever your tax rate is, say 20%. Simples, okay? Now, we're going to have 3 P&L sheets, your actual, your forecast, and your combined. Now, the actuals are what you've actually achieved. So there's 11 months, not 12, because that'll make it a full year. And we just want to see what you've been doing year to date. And you'll see here we've got January, February, and March. So you said that your actual will start in January and your forecast will start in April. So in the forecast sheet, you can see here, it's starting off in April. Now, everything is grouped up. So you just press these to ungroup them, or you can do it, individually. Every sheet has a guide to explain how you need to fill it in at a generalized level. And note every column, the first column of numbers will always start with I. So you can always see with the formulas, if you're auditing things, that everything should be starting with I if you're in the icon. Cool? Now, if we look at this in totality, you can see all these yellow boxes are the ones you're going to want to fill in, okay? Depending on your specific model. So your customers, how much revenue you've been doing, all your costs associated from your COGS down to G&A, and then for your operating cash flow. So we don't have balance sheets or proper cash flow statements in fundraising models because they're frankly a waste of time and no one cares about your balance sheet. What you do care about is the difference between your accounting and the impact on your cash balance sheet, right? So we make a series of adjustments to tell you more realistically what your bank account actually looks like, okay? So the cool thing about this is I know you're going to be fundraising for a while, right? And so how annoying is it to have to update an entire model from scratch, change everything, 1 month later into your process? So let's say you're now into April and you've got new numbers. Well, you just pop them all in and you change on your formatting that this is going to start in April, May. So you just type in, first change that to 5 and that will make it May. Right? And then the model will adapt for it. Now, your forecast, same exact structure, okay? Except everything, you see the little greens? These little greens mean they're links to other sheets. So there's very few things you actually need to input in this model. So you can see here, you can make adjustments for your discounts and vouchers, if you have a cancellations or not, bad debts, credit card fraud, and what your numbers are if you're fundraising. Now, you don't have to fill in all of these. If you don't have cancellations, just put in 0. But these all help you to really think through everything that you might not have thought about. Cool? Now, the P&L combined is exactly the same structure as the P&L forecast, but it just pulls in all the data from the actuals and the forecast and puts it on a month to month. So you see January, February, March, April, May. So the first few months are going to be your actuals, and then these are going to be forecast. So you can see the progression as it happens and show that to investors if you want. It's cool. That is a very nice detailed P&L for you without you having to be an accountant nerd, right? Now, of course, you're going to have tax. You may have depreciation, amortization. Some of this stuff may stress you out, but don't worry. I've put in the default assumptions that you need to put into it. So if you don't care about things, leave it. You don't even look at this sheet. However, if you're a bit more nerdy, and I know some people out there, maybe be a CFO, you can input your CapEx and changes your times declining, the useful CapEx life of assets, and even put in your net operating losses. Cool? Now, next is super simple. This is just, a template P&L that you could pop into your pitch deck if you liked. Now, there's couple too many rows for my liking for pitch deck. So you can pick what you want. So we'll see here, we've got the first 12 months and then the summary for the additional 3 years. Simple. Now, next we've got KPIs. You know what those are, key performance indicators. And yes, we have a lot of them. You can see they're all grouped up. So lots and lots of KPIs calculated for you. Now, note, I am the only person who's actually put out metrics like this. And so I've calculated them in particular ways. There are, of course, lots of different ways you can calculate things like your LTVs and your CACs. So understand, how I'm making my assumptions and make them your own. So you have to understand how they work so they make sense, right? But otherwise, look, I've done them for you. And let's face it, most VCs are probably not going to be able to do the complex calculations anyway. So your MRR customer summary is just a nice little overview of all your revenue. These come out of a bunch of really long, complicated calculation sheets. So I put them in one place so you can dig in and see everything from your renewals and new customers to churn, upgrades, downgrades, and expansion revenue. All the real details that VCs would really like to know, ideally. And, you too, right? So everything you could really want has just been presented for you. Now, here's a cool sheet that I've made, which no one's done before. And this helps you figure out actually how much do you need to raise, and how much you're going to spend. So you could, for example, say, when's your round going to close? How many months of runway do you need based on what you forecasted? And this will tell you how much you actually need to raise. Or you could say, look, I want to raise 2 million. And the model will tell you how many months it's going to last for. So on a gross basis, it's 10 months or net 13 months. Then we've got some cool Marimekko charts, which I've sort of invented for pitch decks like this. You can see more traditional use of funds of pie charts. See 45% on S&M, 16% on G&A, more charts. But you can actually then really dig in and see what are all the components of my R&D. How is that really contributing? Well, we're going to have staff and we're going to have other associated costs. And so, you get asked, why are you spending 45% on S&M? Well, you can actually really see line by line all the costs that have been put into those buckets. That's pretty cool. Now, we've got a ton of charts. These are all taken out of each individual sheet and put in one place. So you can copy and paste them if you like, or just, analyze the trends and see, do they actually make sense? Should my customer care costs be going up that much versus other costs? I don't know. Looking at charts is really useful to see, is what you're forecasting making sense or not? And of course, we've got the same version for your SaaS ones, looking at churns and expansions and, how your funnel metrics are going to work, analyzing your CACs, LTVs, and expansion revenues, etc. Okay. Now, of course, staff are really important for your business, aren't they? Right? They really are your startup and probably a large component of your costs. So this is a super flexible model. You can see you can even add extra people if you feel like it. For G&A, R&D, S&M, and your COGS, I'll bucket them into there. So you can say what start date will people join. If you fire them, you put the end date, put in the salary, percentage bonus, and cool. If you say you're doing a Series A or a Series B, and at that point, you're going to increase the salaries of people, you just type in what the new salary is going to be, what the increased date is going to be. And in the future, those numbers are going to come up, see from about 6 to almost 9, just by typing the date and an increase in salary. Cool. If you have taxes and benefits, just put the average percentage on top, and the calculations will figure them out for you. Yes. The calculations are really complicated and fun, and they took me a really long time. There are some automations in there. So, for example, if you want to hire recruiters because you're suddenly scaling up, then you can say, well, I'll have 5 people. For every 5 people I need a recruiter. Okay. So at some point, maybe you're going to hire recruiters. Then you have, your R&D, your S&M here. Under S&M, I have some automations because you want to just be able to scale your model up and down without having to think about all the implications that are going to have on your staff. So for your salespeople, if your revenue targets go up, then on the basis of your assumptions, you'll hire more salespeople. And if your revenue is less, then you hire less salespeople. And the same thing is going to apply here for your, customer success staff and customer care, your professional internal engineers if you have them, or even professional services if you offer those. Now, spending time figuring out what the cost of paper clips is going to be, that's a pain in the ass, right? So the way I approach all the other costs for your office is really simply. So you have G&A, R&D, and S&M COGS staff. On average per month, the other cost is going to be what? When you hire new people, what's the cost of the laptops and everything going to be in the chairs? Just pick a reasonable number. Same thing if you're doing travel. And, again, like if you're doing series A, B, C, and your costs are going to increase, you can pick what the new cost is going to be and, what that date might be. Because, bigger companies spend more money, right? Waste more money is how you can put it. For everything else, rent, service costs, corporation costs, legal things, you can change these as you like. And, the rest of the costs will just pump through. And you'll see here the category. This tells you which category all the expenses are going to be put into. Remember, we saw that in our source and use, right? That's what you're defining. And then you can look at the charts and see how, you're progressing over time. Oh, it looks like COGS people hiring for some reason. Yeah. And just analyze everything. So this is a super cool sheet. And I hope you really enjoyed that one. Now, moving on, you're going to have other expenses, right? Mainly sort of COGS. So you'll have payment costs, right? Could be credit cards or PayPal, however you're doing it, or even Stripe. You can assign percentages to each one. If you're going to have server costs, maybe you might think about it in terms of API calls, your costs for emails, and these will, filter into your P&L under the COGS section. Now, sales staff. Okay, you don't have to use sales-supported sales, but you can if you like. Rather than trying to forecast the number of salespeople you are and then what their earnings are going to be and how that's going to contribute to revenue, the way I approach this is you forecast how much revenue you have, what percentage of the revenue for that or users are going to need sales support, and then that backwards tells you how many salespeople you'll need in order to hit those. We take pretty rigorous approach that you'll see in Saas, thinking about productivity curves and maybe improvements over time. Of how that happens. So here it takes 4 months for them to get to full productivity. You can figure out what their targeted productivity is, like sort of their on-target earnings, the outcome of their targets, right? And if you're going to have sales managers, sales directors, SDRs, then you can say how many you're going to have for each of the account executives you have. So here we're saying that we'll hire a sales manager for every 7 account executives you hire. And then my model does all sorts of complex calculations on a cohort basis and tells you how many people you need. Okay. Now, next, moving on. Support staff. So customer care, customer success, internal engineering. I mentioned those before. All these are going to filter into your staff sheet, as I mentioned, the COGS here. Okay. And so I take a logical approach here and to say, what percentage of your basic premium or pro customers will need support? How much time will, each customer success or support manager spend with them? How many hours a day are they focused on answering these questions? And that'll tell you how many people you need. So we'll see you need 2, then 5, then 9 in year 3. The same thing applies to your customer success and your, internal engineering. And so as you scale up or down, as your forecasts are, this will tell you how many people you need under those assumptions which you really believed in. Next, expansion revenue. Of course, so you're gonna have basic revenue, but you're gonna hope that money is gonna increase, right? So I have designed 2 templates for you, so you don't have to do modeling depending on what your business is. That's based on modules or releasing new features that people might upsell to, or on a seat basis. How many user accounts you're selling. And so, you can just pick the drop-down menu and it'll change depending on the one you want. So here, this is the module based. You're going to release new modules over time, how much they're going to be, set the date that they're going to be released, what percentage of customers will be using them for each of your 3 plans. If you say want to do it on a seat basis, then, where are we? On a seat basis. So what is the average number of seats that people are going to have? How many additional seats are they going to take over time? And what will the prices per seats be for each of your 3 plans? And what's the average number that will expand to those? And it's a little bit crude, but let's face it, we're forecasting here. And so all this will then feed into your KPIs, your revenues, etc., and you'll see the contribution then from additional revenue to your business. Now, if you do professional services, which a lot of people don't do, but more enterprisey kind of clients might, then you can simply forecast what percentage of your customers will want them, how much you charge for them, and then effectively what is the cost of your staff to actually provide that. And the difference between your cost and your revenue is, of course, going to be extra revenue in your pocket or profit in your pocket. Now, let's get into the core of this, core business pricing. Now, again, I've designed 3 methods for your main revenue. And you can charge either on a monthly fee, a usage fee, or a monthly fee and usage. So monthly fee is, your Calendly or Zendesk or whomever. You charge $40 a month per person. Thank you very much. That's what you're charging. Usage fee could be more like if you're Zapier and people are taking API calls and paying for volume. Or alternatively, maybe you're Zendesk and you acquire Zapier and you start offering monthly fees and API calls. So for each of the 3 packages, you can pick what is your pricing model. So let's look at the one for basic. You see here, we've got the 3 calculations. 1, 2, 3. Under the basic, we'll have a monthly fee if you offer discounts for annual pricing. And then this API call stuff here is to help you calculate what your tech costs will be in your COGS, right? We have the usage calculation based on API calls, selling blocks of them, and then a combination. And the same thing applies to the Premium and the Pro. But again, you don't have to fill in all 3 of these. You just pick the one which is your business model, and you can hide the other 2. And there you go, monthly fee and usage. That's the one you're using, and you would have set, this one to 3 by clicking on the drop down. Now, I'm showing you this guide here because this may look a little bit complicated, but I've written it down to explain it to you. As marketing comes through and you're going to get trials, you want to know how those are going to be allocated. You may have, a totally autonomous model, or you may actually have to hire sales to close those. So let's say, you're very light touch and maybe it's only your premium accounts who are going to get sales support. So you'll say, 20% of our leads are going to have to be sales supported. So SME is the one I'm using for sales supported, whereas auto onboard is automated onboarding means that you don't need salespeople for them. Okay, and you can see how of all those leads that are driving from your traffic will then be allocated between auto onboarded and the SME. Are you charging monthly or are people buying annually? So maybe at the start, 80% of people are monthly, 20% of people are paying annually. That can change over time if you like. So in the future, maybe it's 30% annual. Just make an assumption there. We then split those between the monthly and annual calculations, and then your revenue will sort of be booked and billed in a slightly different way. Now, you can make assumptions for your automated onboarded customers. Are they basic, pro, or premium customers? And then for your sales, again, are they basic, premium, or pro? Now, for your monthly customers, now you have an adoption schedule. So once they have a trial, how long does it take before they actually become a paid customer? In this example, I've assumed that 50% of people will purchase in the first month and 50% will purchase in the second month, which implies it'll take you 2 months to convert all your trials who will convert to paid. And of your trials, we're assuming of the auto onboarded, 25% will convert and 30% of the sales support will convert. So your 25, your 50% gives you your implied adoption curve, okay? And of course, churn happens, right? So what is the average time that you believe you're going to retain your customers? So in this, we believe it's going to be 3.5 years, which would imply that you're going to have a monthly churn of 2.4%. Now, in the early days, your churn's going to be higher, so you can override this and make your churn rate a bit higher before it sort of settles on your long-term rate. Now, are people going to convert between packages? So if they're buying your basic version, they might upgrade to Pro in time, right? So what percentage of people every month will upgrade from one package to another? Or maybe they don't need what you're selling and they just want the smaller version, in which case they're going to downgrade. If you don't want to do all this, just put zeros in all of these boxes and you don't have upgrades or downgrades anymore. Now, the same thing applies for your annual customers, except you're going to define what the annual contract length is. Typically, this is going to be 12 months. It can be less, it can be more, depending on what you want to do. The math works out either way. But we do the same thing. You allocate them between the auto onboard and the sales supported and the package of tiers that they're going to get, what the adoption curve is going to be, and what percentage of people will convert from trials to paid, and what your churn rate is going to be, as well as upgrades, downgrades at that 12-month time. Because unlike the monthly version, your customers are going to make a decision every 12 months as opposed to monthly. The next two sheets, basically a whole lot of calculations where you don't need to do anything. And let's just say there's a lot. Okay, it's all done on a monthly cohort basis, which looks super fancy. But you can see there's a lot of calculations, which took me a very, very long time. And indeed, there's 1,400 rows of calculations in order to calculate everything for you really accurately, actually. And the same thing applies on your annual, except those calculations are just a little bit more complicated. And there's almost 4,000 rows of calculations to do this. I'm not going to really nail into how everything works, but just take my word from it. A lot of attention was paid into all little edge cases that you could have. And in fact, for these two sheets, the key points are actually put into this MRR and customers summary, as I mentioned before. So you'll see here, these are basically the output from the calculations in those two workhorse sheets. Cool, we're almost there. Now, the last section is going to be your marketing. So this is the endpoint. Let's start with some of the inputs. So let's say you're doing channel sales. You can pick, your channel partners, as many as you want, how many leads you think are going to come from those, and if it's a CPA, CPL, what's the fee that you're going to pay them? This may increase over time, so you can set an increase in leads per month, and then all this stuff just basically calculates all the leads and conversions and costs that you're going to need from them. And then you can have your staff costs here, telling you how many channel sales managers you'll need in order to actually manage those channels. Next, you can do blogging, social. So are you going to get featured in TechCrunch or Vanity Fair or, Neil Patel's blog? Well, how many times are you getting featured, right? And then what's the traffic that's coming from each feature? And so that'll effectively just drive traffic to your site. And then for social media, of course, if you're doing Twitters and the Facebooks, depending on how active you are on there, you're going to get some traffic and love there too, right? And so you can be as complicated with details as you want. If you don't really want to care about this, leave my numbers as they are, or just set everything as 0 and just forget about it. But this stuff is all useful because it helps increase your organic, which, as opposed to paid, will decrease your effective CAC. Now, email, again, you can be as complicated as you want. I've taken a very rigorous approach. I've used sort of industry metrics wherever I can. So again, if you don't really care about this stuff, skip over it. But again, it's a nice way for you to come up with the logic as to why your CAC will be a little bit lower. And you know what? 20-30% lower CAC. It's pretty nice. So very simple for your organics. How much traffic you're getting a day coming to your site? How much does that increase over time? Boom, there's your organic. Paid is relatively simple. You just spend money on different channels like SEM, display, Facebook affiliates, etc. And typically that will increase over time, right? And then if you're doing relative branding stuff, which is you can't really track, then you can plug in some here that, we're going to, do trade events or something, and it'll be putting into your P&L under the S&M costs, but it's not going to be directly attributable to real trials. Then, of course, you're putting spend, you get a CPC, so you know how much traffic you're getting to your site. Now, all these sheets then are going to feed into your marketing page. And this, I know it looks a little bit more simple here, but there's a bunch of more detail you can get into if you'd like to, but we'll just hide this for now. So you're going to have conversions, right? So you're going to get traffic that's going to come, and that traffic is going to convert into a trial. So we're saying here, our conversion will be 4% of traffic to trials, and then trial to paid, hopefully, right? So all this stuff will feed in. So these trials then feed into conversion assumptions page, right? As I mentioned, so here you can see all the trials, they feed in, and you start allocating them between your auto onboard and your sales supported. and the packages and how they convert over time. And then, you have got your conversion from traffic to your trial. And here it's going to be your conversion from trial to paid. And then from that, you apply it against your pricing and, how much revenue generating from these, less all your churn, plus, expansion revenue as you has it. And then, of course, you deduct all your support staff, your sales staff, all your expenses, and the rest of your staff. And that's all being done in your P&Ls. Yeah, so you can see the customers that you're having on all sorts of levels of detail between your basic, your premium, your pros, as well as your bookings, your ARRs, your MRR, professional services as it applies. You see that we're not doing professional services for quite some time. If you're offering discount vouchers, what rate is that? Cancellations, you can see your COGS against your margins, right? How much your marketing spend is, and then gross profit after marketing, deducting your OPEX to get down to EBITDA, and then eventually your net income, okay? Then we've got our operating cash flow calculations, which makes a whole series of adjustments for you. So you've got a decent idea about what your actual cash position is going to be. Okay, guys, that is the Saas financial model. It's pretty awesome. I got a lot of ton of really positive feedback as usual. The typical feedback from founders is, do you know what? Wow, that was quite a lot to get through. But do you know what? It made me ask questions that I didn't think to ask myself. And so by going through that exercise, I really got to think about things in a different way and understand my business better. And so, yeah, sure, you need a fundraise, but guys, you're going to commit, 7-10 years maybe to this business. You kind of want to know what you need to do, what you can afford for this business to make good. So your goal is not to start up to fundraise, right? Your goal is to start up to cash out. And so putting in the time, having, an amazing tool like this at your disposal is going to make, give you a better shot at really understanding what you're doing and what you need to do to make it work. And, hopefully making you really successful. So I highly recommend checking it out. You really don't have that much to lose. It took me months to make, and, you can use it out of the tin. So have a great day, guys. Bye.